I believe they're going to have companies out there that throw the word AI in it, and they're not very good or very well-run companies. But there are some big players out there that will do really well because of this new technology. And it's going to change the landscape. And this will be the next, that should be the next big thing that's happening.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we're almost at the end of May. Got a week to go. And new guest, Chad Olivier, is with us. Chad, you've been a financial professional for decades now. And we want to ask you some questions. You have a large group of clients who you've been advising, financial advisor. So question is this, inflation unexpectedly, at least if you look at the headlines, surprise, experts are surprised. Inflation is now sticky. It went from transitory to sticky, and maybe it'll go to semi-permanent. What are you telling your clients to do?
Sure. So thanks for having me, Kerry. First of all, we make sure that our clients have a very sound financial plan, and we're not making, I would say, irrational decisions on what's directly right in front of us. I mean, what we see now is, yes, inflation is a little sticky, but the expectation is that it may stay around this level for a little longer than expected, but companies are doing really well. And so if you're investing in companies that are participating with high growth, with low debt, you will do really well. And Kerry, we've had clients that have been owning some companies. I'm not going to name the specific companies, but they one of them, there's a package in front of my door daily, but we've been having them for 20 plus years, and we've gone through many different types of markets, and good companies will do really well. So we just make sure that clients see that and don't just get scared with the headlines.
All right, so I take it, listening to you, you're optimistic and you still think there's opportunities out there.
I am. I'm a glass half full type of guy, and I've my whole career I've been this way, and we've done extremely well for our clients being this way, and so So I'm actually excited with new things that are happening on the horizon right now in the markets.
But when you look at what's going on here, all right, the economy and, all the instability, political instability in the world, all these things, how do you, and the inflation and, everything else, isn't it hard to maintain your optimism?
I look at everything, and this is I try to explain to clients, everything's competition. So if you look at companies, which stocks are companies, they are competing against someone else in their industry. And at this period of time, there are companies out there that have an extreme amount of cash with great growth rates. And if there's any downturns like we had, if you just go with COVID or any of these other things that have happened in the past couple of years, that generally two bear markets in the last 4.5 years, those companies will be able to stay around, buy up the smaller companies that are having issues, and just continually grow. So I have no worries.
All right. What about the commercial real estate bust and all the bad debt associated with that? That doesn't keep you up at night?
No, but you are correct. We're in a different world, especially since COVID, where we deal with many larger institutions and companies that their amount of spaces that they lease have gone down tremendously in different areas, especially high rent zones, and you got more people working from home. So that commercial side, I mean, that's gonna be a shift. We'll see what the market tends to do in time as we kind of go on with that segment. It's just a segment of the market that its times have changed, and we'll see exactly what ends up happening with those big, large commercial assets, and time will tell.
All right, so tied in with that is also the banking crisis. We had some banks fail. So far, nothing's failed in the past couple of months, but these community and mid-sized banks have really taken it on the chin because they've been funding all that commercial real estate out there. Obviously, you can't be a doomer and you got to think to the future, but somebody who's maybe going to retire in the next 5 years and, wants to hold on to, their portfolio and not take a big hit. What do you tell that person?
Yeah, so every client we have is different, so it depends on what their risk tolerance is. When we're looking at portfolios, we usually look in terms of buckets, and so if they're coming in close to retirement or retiring, that first bucket is mostly very, very liquid short-term assets that we're able to get income from. And then you got the second bucket, which goes a little longer term. Then that third bucket's the big growth portion of the account. So as clients are retiring or getting close to retirement, that's kind of how we have the shift in the portfolio, what they're going to need income wise. So it's important to really understand where your client is at this particular time in their financial lives to determine exactly how much should be in each one of those, I would say, those buckets.
All right. Okay. So, bonds, inflation, they're not the best performing investment in inflation. What's your take on the bond market?
What's interesting with the bond market is, when they started raising rates aggressively, over, I guess it was a year and a half ago, the bonds just took it on the chin as much as the stock market at one point. And we're at, what we tell clients, if we own the individual bonds, you hold the bonds, you're getting an interest rate, you have a maturity, you're going to get, $1,000 per bond or your money back essentially in those bonds if you hold it to maturity. So you got to make sure that you're just not holding all short-term bonds or long-term bonds. And that's the key. And that's where banks got in trouble, especially over the last year, where they were holding so much long-term paper, and they needed more of a laddered portfolio. So we make sure that clients are laddered. And look, if interest rates, if we do go into a slowdown or a recession, and interest rates, and the Fed starts lowering interest rates, any of those interest rate sensitive investments will appreciate. And so in the past, that's what usually happens. Do we know if we're there or not? We don't know. We don't know. But we just got to make sure that we have that in the portfolio.
So, yeah, as far as cutting rates, what are you expecting from the Fed in the coming year?
Yeah, we believe that it may be 1 or 2 times this year, and it would be towards the end of the year. I think I was listening to one of the other podcasts, and I think you kind of got it right, where you talked about the Fed is not necessarily can raise rates or maybe even lower rates, but they'll just talk about it, and it it's a big effect on the market right now, and that's generally what they're doing, and it's almost like how any chance he gets, he wants to kind of throw a wet blanket over anything that's out there, and that's his strategy. So he'll come out, he'll make statements that that we're that we're not raising rates anymore, but then here's, then again, he throws the big wet blanket, but things are still not where we want it to be. And so I believe he'll probably do that here for a while.
Yeah. He's going to hold off till the last possible moment, right?
That's it. Yeah. And we all know they don't get it exactly right ever. So they'll raise too much, they'll lower too much, and they'll be on the wrong side. So, but it is what it is.
Yeah. So just one of those externalities. But obviously, if he starts cutting rates, it's going to be good for bonds, good for housing, right? All of that stuff. You got a forecast for housing? What's coming up down the pike here?
Yeah. So so I know the mortgage rates have come down the past month and a half, and we'll probably stay about this level. I think what's happened, Gary, is that so many, especially young people, are just used to a 2.5%, 3% mortgage rate, which is traditionally not what you're going to pay in that market. So the market has to get used to a much higher rate. 7% probably not, but we believe by this time next year, it should be possibly in the 4.5%, 5.5% range, and stick somewhere in there.
Think so, huh? Yeah. Well, remember the days of double-digit mortgages, right?
Yes, and that's where you had the savings and loans, and many banks got in trouble because again they were on the wrong side of that yield curve while they were lending out money at a much higher rate. So I believe we've all learned our lessons on that, including the government and banking. If you try to go get a long-term CD, they can give you your money back after most of them give you money back after a year. So you'll get some of those 5 or 5.5% CDs, and they may say on paper 3 to 5 years, 3 years or 4 years, but in reality, when those rates start coming down, here's your money back.
Yeah, gotcha. All right, so hey, AI stocks, what's your feeling there? Is it the flavor of the week for Wall Street, or is this thing going to go on and on like the internet has?
It feels, Kerry, it feels like the beginning of the internet. Now, both you and I have some gray hair, so we know what that actually looked like.
Left, yeah,
right, exactly. And so it realistically feels like it is. It's what the internet did to a whole new industry, and what it did to very good companies. I believe they're going to have companies out there that throw the word AI in it, and they're not very good or very well run companies. But there are some big players out there that will do really well because of this new technology. And it's going to change the landscape. And this will be the next, that should be the next big thing that's happening in our marketplace. And I've been doing this for 28 years, and you can see certain things that happen, and you see the trends that happen. And both you and I went through that .com bubble where,
sure,
if you put the word .com behind your name, then all of a sudden you're a company. We'll have some of those again with this AI, but now we got players in there that are just very, very cash rich with high growth rates that can really take advantage of this.
Yeah. All right. So, okay. Any feelings towards precious metals or other so-called safe haven assets?
Sure. And we'll have usually just a small percentage of our portfolio in some precious metals. I guess the only thing we always say to watch out with precious metals, because we'll occasionally have clients that want to hold the physical gold, and they'll be very excited about getting their gold and buying put a tremendous amount of money in it to actually hold the gold. And my only thought of that is I always tell them is, like, if you believe that the world is just going to go in a hole, and we'd have a lot of problems. Like, go buy chickens and buy sort of farmland and get self-sufficient that way. Because walking around with that gold and trying to exchange it's going to be tough. But again, in our portfolio, it is a hedge, and so it ends up being a piece of the portfolio when we're looking at clients' accounts.
Hey, what about cryptocurrencies? Do you have any thoughts or feelings about that?
It's to me, it's extremely interesting. I remember, it was probably 10 plus years ago. I had a young intern who kept showing me crypto, and I'm like, what is this? And I'm like, I kept thinking that it was my sons were playing, video games, and they were trading outfits or something with cryptocurrency or trying to do something. I couldn't figure out exactly what it was, but they may be a place for it. Especially the markets have realized that, and there's ETFs out there that track it. So there's going to be a place for it. Do I completely understand, Kerry? I don't, but it's one of those that yeah, exactly.
I own some, and there's lots of things I don't get. So
right, it's one of those things where we look at it and go, but I don't truly understand how we're talking to each other over Zoom right now, So so I don't know if it's alien technology or what, but it's it doesn't mean
we don't know how anything works anymore. Right. Other than a light switch, we might have an idea, but maybe if you got one of those smart home light switches, you don't know how that works either, right?
No.
So we're at a place where we know more and more about less and less, as somebody once said. All right. So when we have this conversation, Chad, next year, after the first of the year, where are we going to be?
So I believe whoever wins the election, it's not really going to matter. We've seen both of them in action, or non-action with both of them. So I think some key things to possibly look at is actual Congress, who takes true control of Congress, and that's where a lot of things are gonna happen when either party that's in the presidential office has control of the Congress. That's where you see some things go on both sides.
We really need to worry, huh?
Right, exactly. The presidential part, probably not so much. And again, the markets know what they're going to get from both of them. There's not going to be any. It's not any surprises at this point.
All right. So, we'll take your word for that. Hey, just tell us where we find you, how we connect with you on the web.
Sure. Go to oliviergroup.com. It's Chad Olivier, and you can click on that. And we have a big team here, and we could discuss anything financial with you, financial planning.
Excellent. Hey. Then the link will be in the show notes for this interview on financialsurvivalnetwork.com. Make sure that when you go there, you sign up for your free newsletter. If you got a question for Chad, myself, any topic, shoot me an email, kl@kerrylutz.com. Chad, thanks for coming on. We'll talk to you again soon.
Appreciate it, Kerry. Thanks, buddy. Bye.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.